Dear clients, welcome to PhillipCapital's weekly market watch. I'm Richard Leow, investment analyst from Phillip Securities Research. Today, I will share with you on Cogent Holdings, which we have initiated coverage on last Friday. Cogent is a leading provider of integrated logistics services in Singapore. It has an operating history of more than 30 years. Cogent was listed on the main board of the Singapore Exchange in February 2010 and has 4 core business segments. They are Transportation Management Services, Warehousing and Container Depot Management Services, Automotive Logistics Management Services, and lastly, Property Management. For the Transportation Business segment, Cogent holds a fleet of more than 100 prime movers and 400 trailers. Laden and unladen containers are transported between the port, warehouses, container depot, and other destinations. Cogent also has dry hubbing service under this business segment. Dry hubbing is a consolidation of a large shipment of laden containers at an open yard prior to transportation to the port. For the Warehousing and Container Depot business segment, Cogent operates warehouses and one of the largest container depots in Singapore with a capacity of 20,000 TEUs. In addition to general goods, Cogent is licensed to store chemicals, hazardous and flammable materials, as well as both dutable and non-dutable goods. Other value-add services associated with the warehouse operation are inventory management, loading and unloading, packing and palletization, forklifting, and drumming. The container depot is an open yard used to store the unladen containers that are owned by the shipping lines. Cogent also provides repair, maintenance, and refurbishment services for containers. The container depot will be relocated to the rooftop of Cogent One Logistics Hub. The automotive logistics business deals with the import processing, transportation, and storage of new vehicles. It is an integrated service that eliminates unnecessary transitions between operators. Cogent is also licensed to operate in the export processing zone to export used vehicles out of Singapore. Cogent assists the authorities with the repossession of cars with outstanding road taxes, impounding of illegally modified cars, and removal of accident vehicles. In the final business segment of property management, Cogent is the developer and manager of the Grandstand, formerly known as Turf Club. It is a 1 million square foot property with a mix of F&B outlets and kids and family-oriented services. It houses one of the largest used car mart in Singapore with more than 140 showrooms, which complements the automotive logistics business segment. Cogent's new warehouse, the Cogent One Logistics Hub, is due to be completed by the end of this year. It is a 1.6 million square foot GFA warehouse with container depot integrated to the rooftop of the warehouse. Operations from various warehouses and the container depot will be consolidated to Cogent One. Significant cost savings and operating efficiencies will be derived from this consolidation. The consolidation will be in stages starting in the second half of FY14 till second half of FY15. Full effect will be from first half of FY16. We are forecasting a significant increase in earnings for FY16. We think that there is value in Cogent and investors will need to take a long-term view as the consolidation of operations will be in stages. We currently have a buy rating on Cogent with a target price of 47 cents, giving a potential upside of 31% from previous closing price of 36 cents. For more details on Cogent, do refer to our report that was published on 12 December, which is available on our Poems platform. Thank you for watching PhillipCapital's weekly market watch. Do tune in again next week.